Hi, I'm Andrew Wright, Principal of Professional Southport, and this is the Andrew Wright Property Podcast. I've built a multi-million dollar property portfolio, delivering a seven-figure annual rental income, and led my real estate team through thousands of sale and lease transactions. In each episode, I share real deals and strategies that will help you find, fund, and operate profitable property deals. The aim of this show is to provide education and build a community of like-minded investors who can collaborate, share insights, and help each other in each other's journeys. You can make excuses or you can make money, but you can't do both. So come and join us.
Hello and welcome back to the Andrew Wright Property Podcast. Today, we're going to be talking about turning dirt into dollars with industrial outdoor storage. Think truck depots, container yards and equipment laydown. We'll cover why IOS can cash flow with the tenants paying the outgoings, how to choose the right site, what returns to expect, where investors get stuck, and a few real deals Andrew's done lately, including one that he bought $550,000 below UCV. Andrew, welcome back to the podcast.
How you going, Adam? Do you like my tie?
I do. For anyone watching on YouTube, we've got a very bright tie in here in the studio today with what was that character's name?
It's a golfing guy, and he's smashing his golf club because he's not happy.
Is that the Tassie Devil? I
yeah.
used to be into my Warner Brothers stuff.
That's what happens when you've hit a nice drive down the middle, you chip it on, and you four putt.
Yeah,
you smash your clubs like this guy at the top.
Yeah, well, I've done that plenty of times. I've loved. All right, so industrial outdoor storage, or as we're going to refer to it as IOS. What is it, mate?
IOS is basically land that is zoned industrial that can be used to park trucks, buses, building equipment, excavators, might be tiny homes, shipping containers, the like, anything that doesn't need to be inside a warehouse out of the sun. And the reason it exists is because the rental rates per square metre might be 10 or 20% that a tenant would pay if it had to be under a big warehouse.
Right.
Out of the sun and out of the rain. You know, if you can store it outside, you're going to save a lot of money on the rent.
Sure. Okay. So this is very interesting. Something probably a lot of people haven't thought about or considered. How did you come across this as a potential investment area of interest?
Look, every morning I'm in the gym, I listen to podcasts, and there's just a couple in the United States talking about industrial outdoor storage, and the more and more I learn about it, it just fascinated me, and the same opportunity exists here in Australia.
Right. Okay. So what sort of returns are you looking at when you know, obviously they would vary, but talk me through returns on IOS.
Okay. So the first thing to note is that it would depend on whether there's actually a warehouse on the site. So typically most of these truck depots, for example, would only have maybe 10 to 20% site coverage of a site with actual shed on it. It's mainly just hard stand.
Sure.
Might be compacted gravel or concrete. So the amount of return you have will first of all depend on whether you have a shed on it or whether it's just all outside storage. But
Does it matter whether there's concrete or gravel or what the actual surface is?
It does, depending on the weight of what's being stored there.
On it,
so
right.
I might sort of explain the different types of facilities which might answer that question better. So the way I see it is you've pretty much got three categories. C grade sort of site might be an old rural property like a farm where the council's just changed the zoning to industrial, and it's not properly fenced. There's no improvements to the ground. There's no hard stand there. If you wanted to leave a truck there, you know, you might come back in a week and have smashed windows, or it might be gone. There's no security or anything.
No, yeah.
Class B is, you'd expect that to be fully fenced.
Yep.
And it would probably have some compacted gravel on it. And then you go up to the A grade, usually found in a custom-built logistics industrial park facility where you've got really wide bitumen roads for these double and triple road trains to turn around. They need big turning circles,
Sure.
really solid concrete overpasses leading to the site. You've got to be fully fenced for security, probably security cameras,
Yep.
probably security lighting,
Mm-hmm.
and those facilities would either be very, very thick compacted gravel or even asphalt, bitumen, or concrete, which is the most premium one that lasts
Sure.
the longest. Some of them might even have toilets and places for them to wash the trucks down and things like that. But that's A grade, and the returns you get are different for each of those three different asset classes, as is the quality of the tenant.
Sure.
So when you're dealing with B grade stuff, which I've recently purchased, they're mum and dad tenants. They're usually signing shorter term leases, more likely not to pay the rent, more problems. Whereas when you go into the more expensive A grade facilities, the rental yields might be a lot lower, maybe 3 to 5% net instead of up to 10% on the B and C class facilities, but lower risk, easier to manage, and the banks like lending on them because they're safer, better quality tenants.
Better quality tenants. Okay. So, talk me through you just started there, but the types of tenants you do have and the leases that they sort of take on these. Tell me a bit more about that.
Well, typically on an A grade facility, I at the moment I've only got one A grade facility. I'm building a second one, but that one there was a long term tenant in there that paid rent, and they paid 100% of the outgoings, including insurances, rates, land tax, the whole box and dice. On the B grade facilities,
So, hang on, what tenant was that? What was their business? What were they using it for?
look, I've only just purchased that site last week. The tenant there is RGM Maintenance. I think they maintain trucks.
Right.
They have 8 truck depots around Australia, and they're actually moving out of this facility at the end of the year because they're building another one up in Townsville that they're going to move into. And a lot of these big trucking companies like to buy their own sites because they don't want to pay the rent.
Yep.
But that's a good exit strategy if you can get hold of some. That's one of the exit strategies is you can build it or buy it, and down the track if you do need to sell, one of the exit strategies is to sell to the end users, the truckers themselves, which is
That saves them money, and you make a good return on your investment.
yeah. And the other exit strategies, like you can sell to number 2, another investor like myself, someone who's just wanting the income and capital growth from the site. The third type of exit might be a developer who actually wants to build warehouses and take the property to its highest and best use. And what I'm particularly excited about is option 4 is perhaps packaging multiple sites together and selling it off to a big fund manager, a property trust or something that usually they won't look at anything under $10 or $20 million worth of land.
Right.
But at the moment, I have a game plan to
Build a portfolio.
package a portfolio and maybe sell it for a premium.
Interesting, because I'm sure, Andrew, most people think when, lay people think building a property portfolio, it's about residential houses.
Yeah.
And buying the next one and this one. They don't think of it in terms of what you're talking about here, a portfolio of iOS properties and, the value that would stack on to have multiple and then be available to a much bigger buyer.
I just had something come into my subconscious when you said that building a big portfolio of houses. If you've got 100 houses, you've got 100 roofs to leak, hundreds of air conditioners that break down, hundreds of toilets that stop flushing.
Yep.
I could have 100 truck depots. I don't pay insurance on any building because there is no building most of the time. There's no air conditioning problems. There's no leaking roofs. There's nothing.
Yep.
So the management of this type of asset is so much easier, particularly when you have a single tenant facility, and that's another discussion too. So you could go down this track of industrial outdoor storage. There's 2 different paths you could go down. One is the choice that I've made, and that is long-term tenant, single tenancies.
Yep.
Or you could run it as overnight truck parking and treat it more like a business.
Like a parking lot.
But you've got to more intensive with the labour. You've got to employ someone, boots on the ground, more technology. You will make a lot more money that way, but it chews up a lot more of your time.
And
that's
the way up. But I did want to ask before we move on from tenants. How easy is it to find tenants? A lot of people out there thinking, well, I've never looked at this. I know, if I buy a home, I know roughly what the rental market looks like there, the vacancy rates, etc. Talk to me about the ease of finding tenants, vacancy rates and that sort of thing when it comes to, an asset class like this.
Yeah, so I'm only just learning and feeling my way around this. I've started 1 year ago, January this year I bought my first one, so I'm certainly not an expert, but I think it depends on the region. Every region is different. But what I can say is that on recent research that I've done, even Googling, there are over 1 million heavy vehicles in Australia over 4.5 tonnes
that have got to be somewhere.
To park. And there is a lot less than 1 million legal heavy truck parks available.
Right.
So there is always going to be a shortage.
So when you look at that supply-demand figure right there.
And it's going to get worse because councils around Australia are under a lot of pressure to release more land for residential purposes, and they don't like releasing it for industrial use. And every single time someone who owns industrial land builds a shed on it, it takes away from the supply of legal places for a truck to park.
Wow. Okay.
So I'm massively
You're very excited about this.
It's my favourite asset class.
Right. Yeah. I can tell. I can tell. We've talked about it a bit in the past, and I'm loving this episode already because this is just, for someone who knows nothing about this, blows my mind. All right. Talk about site criteria. What do you look for? How do you find these places? Is there a checklist?
I'm sure there would be a checklist, but the step number one, if I could make a checklist off the top of my cuff, has to be zoned industrial land. If it's not an existing use, you may have to even apply for a material change of use with the local council to use it as a truck parking depot or an industrial outdoor storage facility. It's certainly helpful if the industrial land is in close proximity to a highway, because trucks are going up and down the highway and they don't want to drive for 20 minutes just to park the car every night when they go for a nap. They want to be close to a highway, and close to a port might be an additional bonus because that's quite often the route that they're travelling.
Where they've started from, or finishing,
That's where I think the best location for these types of sites is. As far as the sites themselves, they usually would need to be at least 1 acre in size, up to 10 acres of land. And as I mentioned before, it's probably best if they're fully fenced, a solid concrete overpass, wide for a double semi-trailer to actually have that big turning circle to get in safely. And preferably, some security lighting and security cameras. It's very hard to provide Wi-Fi around a big site like that because it's just expensive to provide. But the main thing is it's well located, close to a highway, fully fenced and secure, and preferably, if you could afford to concrete every one, you would do it. You get the higher rent for that. Compacted gravel can move around, and asphalt, when those big trucks turn around, they can actually damage the asphalt as well. So A grade would be concrete, but it's so expensive that most sites are compacted gravel.
Now, you talked about whether there's a building or not on these. Now, tell me more about that, first of all. And again, this is coming from someone who knows nothing about this sort of asset class. Do you need an on-site manager at these places? Do you have to have a building? How do you manage, incoming, outgoing trucks? How does all that fit together?
Well, I'm still learning, but a couple of the sites I bought this year don't have any dwelling on it at all.
At all.
There's nothing
that's
there.
what I was wondering.
A lot of these people with the local council, wherever they are, will allow a relocatable home. So it could be like a caravan on wheels or some relocatable little office that people work out of when they're there. So that's certainly quite common. There are other more, when you get to the A-grade sort of facilities, most of them, not all of them, but most of them would have some sort of dwelling on site covering 10 to 20% of the site.
Sure. Okay. And depending on your tenants and the model you're going for, as you have explained, that would determine whether you actually needed an on-site management team or
Yeah,
not.
no, well, I don't
That's
have any
not the one you want,
intention at
no.
all to have overnight parking. You can get a lot more, charging for overnight or weekly parking rates, but then you've got to have someone on the ground or some magic app on your phone.
All sorts of,
I don't want to go down that track.
Yep.
Down the track, I may do that, but at this point in time, I'd rather just have single tenant properties that you just don't hear from them. There's nothing to do.
And in your experience, we talked supply and demand so far. You said it's only been a new thing for you, but finding those one tenant, single tenancy for your sites hasn't been a big issue.
So far, it hasn't. As I said, I've bought 6 blocks of land this year on 4 different contracts of sale, and 3 of them already had tenants, were fully tenanted. The other one, I'm actually going through a development approval for a change of use, which we'll talk about shortly, to actually build a site. That one's obviously empty with no income. So I'm sure there'll be vacancy risks there, but I'm hoping that it's only going to be minimal vacancy.
Sure. All right. Well, talk me through. You've got 4 deals to tell me about, don't you?
Yeah, so I don't forget them. I think maybe chronologically would be the way to go through these ones.
Yep.
So the first one, I think it was January this year. And so we're only talking 9 or 10 months ago.
Yeah.
I'm only a newbie at this, but a bit of experience already. So this was, I haven't seen it yet, actually. It's in Emerald.
Okay.
Haven't flown up to have a look at it. It's too far out in the sticks for me. But and it's cheap. You don't have to be a multi-millionaire to get involved with this sort of stuff. It's cheaper than a house.
I think that this is a point I really want to make for our listeners. Like, I think we've been so drilled here in Australia to think property investment needs to be residential property, and that's what we're talking about here can be done by your mum and dad who've got that cash that they'd be mostly putting into an investment property.
Yeah, and the average house in the CBDs of the capital cities is $1 million now. So this site, people might be surprised to learn I paid $340,000 for.
Okay.
3,230 something square meters of land, so nearly an acre. It already had a tenant in there, so they'd signed it's a mum and dad truck parking company, transport company up in Emerald.
Yep.
And they just parked their semi-trailers there.
Okay.
They had a 2-year lease with a 2-year option. It was fully fenced. The owner had already spent $30,000 putting a concrete overpass there. There was another $30,000 of compacted dirt and gravel on the site. And because there was an existing lease on that property, that is the only one of the 4 I was able to get a bank loan from. Banks hate lending on vacant land, but if you have a long-term lease on it, they will lend 50%.
Right.
So the debt on that one is only just over 6%, which is fantastic. And I was able to get a 50% loan from one of the banks on that. Rental return.
That was my next question. Yep.
$25,000 a year plus all the outgoing. So it's about 7.5% net return. Mm-hmm. And on my 50% deposit, I get the 7.5%. And on the bank's money, I'm making 1.5% because I'm only paying 6%. But the future of that site is great. They've just exercised their option to extend for another 2 years.
Perfect.
The previous owner who sold that one had also successfully got a development approved for a 900 square metre shed on the site, and he's already paid all the infrastructure charges. So at any point in time, if that truck transport company doesn't want to rent it, I've already got the approvals there. The council fees have already been paid. I can just whack up a shed.
Yep.
And then increase the potential range of tenants that I can.
Yep.
Then
but
I can.
Comes back to, if you haven't listened to a previous episode, highest and best use.
Yeah. Now I may not want to spend the money to do that. If I get someone else ready to keep paying rent and as truck parking, I won't build the shed. I'll just apply for an extension at the end of 4 years, pay a small fee to the council, and extend that application for another 4 years. So that's. The first example, I'm not going to help anyone retire, but it's 7.5% net. It could be a much bigger property down the track, a multi-million-dollar property if I build a 900 square metre shed on it.
Well, that's what I want to concentrate on, and for a minute before we move to the next one. I want our listeners to hear how you think, Andrew, because what in your mind should that tenant ever move on and you do put a shed on it, what does that open you up to
Okay, so
potentially?
well, first of all, I hope it doesn't come to that, because with most commercial tenancy agreements, it'll be written in there that the tenant has to give you probably 6 months notice if they're going to move out. So that allows me to go to realcommercial.com.au and commercial real estate,
Find another one.
advertise for 6 months to find another truck parking tenant. Now, with the shortage of supply around the place, I would hope that by the time they move out or shortly thereafter, I'll have someone ready to go in. I don't want to build a shed.
No.
I'm not a builder.
No.
It's a pain in the ass.
Yep.
But if it came to that, if I had a vacancy like I've had in other asset classes for 6 or 12 months, I would be forced to build a shed, and then the rent will be massively higher because you've got a much bigger property there to rent out, and your rents will be accordingly uplifted to what you're trying to lease out, and I'm sure the returns will be very good. And industrial sheds are the cheapest type of construction to do. It's just 4 walls and some LED lights and a few other little things here and there. They're a lot easier to build than residential or retail property, and I don't mind going down that track if I need to.
Yep, perfect. All right, deal number 2.
The next one I bought from selling that church. I had a bit of money left over when we did another episode before, and I went out to Toowoomba and I purchased 4 acres, just under 4 acres of industrial zoned land. It is just vacant land.
You just found this on Real Commercial?
Yeah, it was just like the Emerald one. It was all online. Anyone else could have bought it.
Yep.
It was 15,800 square meters of land. It's all very, very flat, which is great, and it is literally 100 meters from the highway, the Warrego Highway, and not far from that other new Toowoomba bypass road that goes up to the Dalby and Oakey and all that sort of stuff. So really, really close to the highway, 4 acres of land. I looked up the road at a place called Withcott. This place is in the suburb of Helidon. It's about 15 minutes from Toowoomba, down the bottom of the Toowoomba Range.
Right.
Up the road in Withcott, just 10 minutes away, they're selling this type of property for $400 a square metre. I bought this site for $27 a square metre.
Wow.
So $420,000 for 4 acres of industrial land. Now, if you look on the Gold Coast to Yatala here, people are paying $1,500 a square metre.
Really?
I've paid $27 a square metre for this land. Okay.
What is it when you found it? What is it? Is it? It's a paddock. It's a what?
Yeah, it's an old rural property that the Lockyer Valley Council rezoned a section of rural land to industrial.
So there's the key right there, isn't it? That's where your radar goes off.
Yeah.
It's that the approval's been changed.
Yes.
You're looking at it. Can this work? Ticking off things. Am I close to the highway?
Yes.
Is this an area where a lot of trucks come past?
Yes, it is.
And can I say, holy shit, look at the price.
Yeah, and there's like 100 and I'm so embarrassed I can't remember, but 150 metres of frontage on this road, like massive frontage, and it's only 100 metres from the highway, and it's flat. There's NBN and 3-phase power already connected to the site, and
Okay, so what did you have to do to it to convert it
well,
to
I'm
be
still
ready?
doing it now. So I've got a town planner on the job. I've employed some engineers to. I'm not educated in all of this sort of stuff. That's why you employ smart people to help you out. I've got engineers doing stormwater reports and all this sort of stuff with the drainage to work out what I need to do. And very shortly, in the next few weeks, we'll be lodging a development application for approval to make it a truck parking site. So unfortunately, what I didn't realise is that once I've had all the engineers look at it after a couple of months, they've come back to me and said, Andrew, we can't build on the whole 4 acres. We've got these new flood maps from the council that said if there was a 1 in 100 year flood, there's about half of this site which would have water flowing over it. And if you want to build on there some sheds or something like that, you have to elevate them on poles or something like that. I said, oh, look, that's too expensive. You might have to have a thing called a very expensive water detention device, which means that when it rains or floods, all the water is held in these tanks.
Right.
And it's slowly released out to the footpath so it doesn't flood the main road.
Gotcha.
Can cost hundreds of thousands of dollars. So I didn't want to go down that track. So At the moment, we're looking like doing hard stand on 7,500 square metres, about half of that site,
Yep.
which will be a lot easier to build and it won't cost me as much either. And I'm doing it in 2 stages. So stage 1 is just the hard stand, so people can use it for parking, industrial outdoor storage. And stage 2, if my tenants demand it, is I can build a couple of sheds on there later.
Yep.
And the reason I'm doing it over 2 stages is when you get a development application approved and you start building, you have to pay to the council infrastructure charges up front for the whole development. But by doing it in 2 stages, I don't have to pay all the infrastructure charges for the 2 sheds
Until
I decide to do if or when.
Yep.
So it could save me, $100,000
All right.
or more in infrastructure charges by doing it in 2
So
stages.
phase 1, what's that costing you?
I don't know yet. I'm working through that. Once I get the approvals, I'll get some quotes from Earthworks. But my understanding is probably sort of, if I go with gravel, it might be $30 a square metre for gravel, which might be on say around the numbers 8,000, 2 acres.
It's costing you $3 more than the actual land.
Well, it would cost me 8,000 square metres times 30. That's $250,000 for the compacted gravel. The local council charges $12.50 per square metre in infrastructure charges. So there's another $100,000. What's 8,000 times 12? About $96,000 just in infrastructure charges to the council before we get started.
Yep.
There's $350,000. Once it's all compacted, I'd have to put a fence around it, maybe some lights and some cameras. That's without a shed. And I don't have the engineer's instructions yet as to what sort of drainage I might need to build. The concrete overpass will cost me $50,000. I'll probably have a security gate with some fancy code where they can dial their phone and it'll automatically open. That could be another $50,000. I don't know. So may well be $700,000 or $800,000 I need to spend on it, which will bring it up to $1.2 million. It'll be worth $2 million all day long
from the moment that you open it.
Yeah.
Yep.
It will be.
And then
that's without building sheds. That's just
sure.
Yeah.
And I'm going to come back to a question that comes up a bit now. Is your plan then would still be to keep it though?
Absolutely.
You don't sell unless there's a particularly good reason to.
No. So look, it's all hypothetical at the moment. But if I go down that track in a year's time, it's all done, and I get some tenants in there. There'll be an equity uplift there. I'll get it revalued.
Yep.
Or the first thing I'll do, I'll come back to how I bought that one. Remember, banks don't lend on empty land.
No.
Same deal. So I used some of that church money, and a mate of mine who lent me on the church, he's lent me the money, a private loan. He lent me, I think it was like 70% or 60% on that site because banks won't finance it. So I've got him. So what happens is once I finish it, I can get it revalued. I get some long leases there. I can then go to a bank and get the 50% loan at the cheaper 6% interest. Hopefully you have a little bit more equity there that I can use to go and buy another site.
Fantastic.
And don't sell. And the other thing about this site is if I can't find a tenant to release the whole 2 acres of hard stand, I can put a fence in the middle and break it up into 2 or 3 and get 2 or 3 smaller tenants.
Yep. Fantastic. One question I've got before we move on to deal 3. You mentioned it was zoned industrial, but you needed to get approval to turn it into a truck parking.
Yeah, great question.
So there's a lot of people thinking, oh, well, he's just gone and he's got the whole plan is to make a truck parking depot. It's industrial. Then you've thrown in the curly one that actually has to be approved for truck parking. Talk me through that.
Yeah, look, it's very, very sad. It was only after I purchased the site that I had that exact same query of you because
You didn't know that this was something? Wow.
I didn't know. It's really crazy, but the council has zoned it industrial. And I said, I rang them up to make sure I'm just going to put some hard stand on here and rent it out for truck parking. Oh, no, it's not approved for that. And I said, well, it's zoned industrial, isn't it? What can I legally do on it without applying for a change of use? And they came back with some really weird response of, out of that 15,800 square metres of land, Andrew, you're allowed to use about 15 square metres of it for a battery storage facility. I still don't get it. Like, I'm not joking.
Wow.
15,800, the only legal use was about 15 square metres for a battery storage facility.
What was the point of zoning it industrial?
It quite clearly is something that the council realises they need some more industrial land, but they want to make sure that it is constructed with the best needs of the community, and they can put their hands out for fees.
Yep.
And that's what it's all about. I mean, I've come to that conclusion. I may be offending some people by saying that, but it's a money grab.
Right. Okay.
Yep.
But you have got the approval now.
No.
You haven't?
No. My town plan is working. I'm still waiting on the final engineering drawings. I've just had to go back to the building designers now we were originally going to put hardstand on about 12,000 out of that 15.8. Now we're cutting it back to 7.5. We should be lodging in the next couple of weeks for the development approval.
What happens if you don't get it?
I'll get it. It'll go through. That's, yeah.
Okay.
I mean, there might be some changes, but it'll come
happen.
through in some manner, shape, or form. I mean, they've zoned it industrial because they want it to be used as industrial land for the community.
Yep. All right. We're up to deal 3.
Okay, and the next one, for hopefully every single viewer out there will get excited at the price range of this one. Again, exactly the same price as the Emerald one, $340,000 again, 1/3 of the price of a house in the capital city. This one was
This is very doable.
Very doable
for your average
Yep.
property investor.
Absolutely. It's almost identical size, and to the Emerald one, it was 3,230 something square meters of land, fully fenced and already broken down into 3 separate yards. It had 3 separate tenants in there, just industrial, outdoor storage with a fence around it, and the rental return on that 340,000 is 42,500 or 12.5% rental return.
Why is someone selling it?
I don't know.
This again. There's going to be certain things that come up in just about every episode of this podcast series, Andrew, and I'm going to bring it up again now. You look at every listing.
Yes, I do.
Every listing to find these gems. They're there.
Yep.
And
Everyone
your
else could
answer
have
to
bought
that blows me away.
Yeah.
You look at this and say, you'd probably ask yourself the question, why are they selling? Did you look for? So there must be a red flag here somewhere, or
Well, a lot of people wouldn't have found that one because it was actually listed for sale with the site next door. 18 Ridge Street, Roseneath in Townsville is what it was advertised at, but it was 2 separate lots for sale, and it said on the advertising, both combined or each separately. Now, I looked at the aerial photograph, which I'll put on this YouTube for viewers to have a look at, and the 18 Ridge Street was 2 separate tenancies, and a lot of it was all fully grass still. And I had a look at the other half at 15 to 17 Nadzeb on the other street. It was broken into 3, so it had 3 tenants. I thought, well, maybe there's a lot more of that rent being apportioned to that second site. And it was fully hardstand. It was a lot better developed, 3 tenants instead of 2. I thought, well, maybe I could just look at that half. And on the website, it was marketed at X amount of income for the whole 2 sites.
Yep.
But when I did my due diligence, it showed me that the majority, 42.5 out of 60-something, was for that half of it. So I thought, well, why would I buy the whole lot? If I just buy that half, I'm getting 12.5% rental return. It's fully fenced into 3 separate yards, 3 existing tenants, 12.5% return. There's no buildings to insure. I pay about $500 a year in public liability insurance is my only outgoing on that property apart from some rates.
Wow.
What a deal. Why wouldn't you do that all day long? Now, only short-term leases there because the guy running it had operated short-term leases. So once again, I couldn't get a bank loan. So I approached a different friend and got a private loan on that one, a 70% LVR.
Yep.
But because I'm getting 12.5% rent, there's nothing coming out of my pocket on the private money loan, and I will, in the next month or so, put those 3 tenants on 2 or 3 year leases so I can go back to a bank and say, look, now I've got 2 or 3 year leases on this site. Can you lend me 50% at 6% interest instead
and go back, pay off your friend, and
instead of paying the higher interest, I'll go on to the 6%. So I'll be getting 12.5% rent, paying only 6% to the bank.
Yep.
Well, I mean. And the other thing is, people say, oh, you can get more capital growth from resi. Well, that's in some cases may be true, but with the sites I'm buying, that's just baloney because that site there, nearly an acre of industrial land, that's going to go up in value. I've paid $100 a square metre for that one. So 3,300 square metres of land. I've paid 340,000 for. I paid $100 a square metre. In Yatala, it's $1,500 or $1,600 a square metre. Like, there's so much upside on the capital growth there. It's unbelievable.
So another good point, I think, too, then for our listeners, is something you're more than comfortable doing, and that is investing in places that are far-flung and not, close to where you live or that you need to see necessarily, or all of that. Be willing to do that. Be willing to, look far further afield, because I think a lot of people probably feel the security of wanting to invest close to where they physically are.
I think it's probably a little bit easier when it's just land.
Yeah.
Like, if it was a house, I would probably want to fly there and have a look at it. Like that one I bought sight unseen as well. I didn't. I flew there after I'd bought it to check it out. But if it's just land, you don't really need to go and tap all the walls and turn on the lights and all that sort of stuff. It's a little bit easier to take a punt on something sight unseen and further away from home. So, that's my feeling.
Crazy.
And the other thing about that's what I like that site as opposed to the Emerald one, even though I couldn't get bank finance because there was no long-term lease, is there's actually 3 separate lots of income there, like 3 separate. If one moves out, I've still got 2/3 of the income.
Yeah.
So
Yep. Absolutely.
From
so
a risk management
point of view, you're covered.
Yeah.
All right. Give us your final deal.
Last week I settled on 13 Cupford Drive in Roseneath, up in Townsville again. It was advertised online for 3 or 6 months for $1.5 million.
Okay, so a much bigger one.
This was an A-grade facility.
Mm-hmm.
I checked on the Queensland State Government website, whatever that is, and the land valuation was $1.7 million. Now, obviously, there was a relationship problem with the owner, needed to get rid of it. There is an A-grade tenant in there, as I mentioned before, RGM Maintenance, I think their name is, but they're moving out at the end of the year. So, again, no one can get finance for an empty block of land, which probably is what creates the opportunity for investors who can think outside the box. I couldn't get a bank loan either. So, once again, for the 3rd time this year, on a 3rd different deal, I've had to get a private money loan from a mate of mine. And I bought that site for $1,150,000, $550,000 less than the unimproved capital valuer as valued by the Governor General. And there's a couple of $100,000 of improvements there in addition to that: fencing, concrete overpass, hard stand, all that type of stuff. So good deal.
Yeah.
Good deal.
Rental return?
Currently they're paying $15 a square metre plus out, so 6,038 square metres. It's 90 something grand a year plus all the outgoings. So the net return on that is 90 on 1.5, whatever that is, 7 point something % net return. Again, when you go to the more A grade stuff, your net yields are going to be slightly lower because you've got a safer tenant, and you're not going to get 10% net with an A grade tenant like that. But if interest rates, when I get that released, I'm advertising it right now because the tenant's moving out.
Well, this is my big question. Are you in a hole if you can't find another tenant?
Yes, I am. And that's why I'm advertising now. I've got 2 months to find another tenant, and there's a massive risk. And in fact, there's a high likelihood that there'll be some vacancy there because the lease finishes 31 December. I can't imagine anyone first week of January moving their truck parking site there, and I'll suffer some vacancy there. But the $550,000 discount on land value is a fairly good buffer to play with if it takes me a few months to find another tenant. Secondly, from a risk management point of view, they're paying $15 a square metre. Another fund manager in the area just told me a recent comparable transaction was leased out at $25 a square metre, which would make market rent there $150,000 a year, not $90,000.
Yep.
So there's plenty of upside there, and if I can rent the thing out at a higher rate than $15 a square metre plus outs, there'll be an immediate capital growth again.
Fantastic. 4 absolutely amazing deals.
I just want to add one more thing, reason why I'm so excited about that one, Adam. It's 3 blocks of land. Okay, I bought it on one contract, but it's lots 26, 27, 28. From a risk management point of view again, if I can't lease that thing out, I can put up 2 more fences. I can rent the 3 blocks individually.
Effectively subdivide.
To smaller $2,000 tenancies. And when you have smaller tenancies, there's a lot more potential tenants in the pool that can afford to rent the place.
Yep.
Could be small blue-collar workers, plumbers, people who fix pools or whatever, electricians, someone who sells caravans or boats. They might just want to store stuff there. There's plenty of smaller tenants that I can put in there. And if I have real trouble, well, guess what? I can sell. If I sold each, there's 3 lot there, and I sold a couple for $600 each, I got me $1.2 million back, and I got a free block of land left.
Yep.
Third one's free.
Unreal.
And I don't need to go to the council and pay them fees to subdivide. It's what you call in residential a splitter block. It's already legally 3 different blocks of land.
You just have to put up a fence.
Put up a fence, sell it.
Yep.
I sell 2, got 1 free block of land.
Unreal. Absolutely love it. Absolutely love it. Fantastic, Andrew. Look, you can tell I've absolutely loved this.
Can you tell
episode.
I'm excited about this?
I can.
I'm going to buy 100 of these things.
I love it.
I'm
and look,
joking.
that's what this podcast is all about. If you've enjoyed this episode, please, the contact details are down in the show notes. Jump in, send us an email, join Andrew's community, where you'll get newsletters and all sorts of things that'll be coming, free resources and everything else. This whole podcast is about Andrew sharing his knowledge, and we'll be having other people on the show as we roll forward who will share theirs. This is about a community and like-minded people who can help, collaborate, possibly even do deals together. Who knows?
Look, Adam, one thing's for sure is I don't have enough money to buy a lot of these things. I can find really good sites, and I'm hoping that through this podcast I'll meet people that get excited about what I'm talking about, and they may want to go and invest with me because I can't buy them or I can find them. That's my skill set. Yep. I need some help.
Yep, fantastic. Yeah. So do join Andrew's email list there. Become part of the community. This is going to grow. It's going to grow dramatically as this podcast grows. But do give us a like, give us a follow, subscribe to the podcast, share it with other people who are passionate about property. And Andrew, I'm absolutely loving being a part of this with you, and can't wait to sit down with you on the next episode.
Thanks, Adam. Thanks.
See you next time.
Okay. Thanks for listening to the Andrew Wright Property Podcast. This is all about building a community of like-minded investors who can share real-life stories, experiences, and collaborate with a view to helping each other. Join us. Get in touch through the link in the show notes. I look forward to you joining me on the next episode.